Hedge funds have gotten into the value trade, as a lot of people did last year and this year, but also they're really getting and doubling down on tech.
Powell making it very clear last Friday that the dovish pivot that maybe many investors, maybe what the market was hoping to see, likely won't happen. What does this mean for equities over the coming months? Should we anticipate more selling ahead?
You know, some investors won't do well, but I think those smart investors who can be flexible in the kinds of factor rotations that Lizanne was talking about, I think will actually do well here.
Inflation and Fed hawkishness is still a hot topic. The last few days have been tough for the crypto industry. Powell's Jackson Hole speech on August 26 forced the crypto market to bottom at $19,500 in the early hours of August 29. This has led to a shakeup in the crypto world, with many businesses and investors failing and others struggling to stay afloat. Now many are wondering if another Bitcoin drop awaits ahead. Now in today's video, Kevin O'Leary recently shared his advice for investors and market participants on this major crypto crash. He also shares valuable information regarding regulation and adoption around crypto, so stay tuned till the end. And if you're new to my channel, be sure to subscribe for more videos on economy, market, and crypto latest updates. Let's dive into the video.
I'm in the camp that likes to have hedge funds short. That's particularly if that's the consensus, that's extremely bullish for markets. Obviously have to cover. If you look at hedge funds as an index, they're wrong 50% of the time, and you'd expect that. Different strategies, obviously, but the added bonus about hedge funds and why they can add a lot of volatility, and sometimes to the upside, is many of them use 3 to 7 times leverage. So when they're wrong, they're really wrong. And obviously that's even been exacerbated in the crypto market, where we've seen lots of leverage blow up all kinds of different business models, which I consider very healthy. So the reason that it's been difficult to really call the bottom in the market or time the market, if you weren't participating in it during the 5 weeks of trading in July and August, you've missed all the gains this year. And they were unanticipated gains when the market decided that the economy was much stronger than people gave it credit for, and that consumers, still awash in $6 trillion worth of free printed cash, are still spending. So where we go next is a huge debate. It's whether it's 50 basis points or 75, it's one of the above. And then probably one more hike after that, and then we'll have to see what the Fed does. But all of this is baked into the market, and earnings in the last quarter have been much better than anticipated. So everybody's been confounded by the economy, by the market, and even crypto.
Now, it's no secret that the crypto market has seen a major crash lately. Bitcoin and other cryptos have lost a significant amount of their value. This has led to a loss of confidence in the stability of these assets, and many investors have even fled the market. But according to Kevin, if you didn't participate in the market during the summer, you missed on some of the biggest gains of the year. Investing is all about timing. I know there's volatility, inflation, and Fed hawkishness revolving around the crypto world, but if you look at a long-term horizon, you can gain good profits by investing in this period. Do you guys agree? Let me know in the comments below.
I was just going to say, from the context of an investor, not any one specific blow up, but over the last 90 days, we've had catastrophic failure in all kinds of different business models, from stablecoin to platforms that do lending. I mean, this is actually a good thing from this perspective. I mean, what's occurring here is the experimental business models, or what I would call, without showing any disrespect when I say this, but just idiot management teams that have never had any experience with leverage, because leverage has destroyed platforms long before crypto, whether it was stocks or bonds or real estate. If you don't understand what you're doing with leverage, you get wiped out, and you should get wiped out. And it's a very important learning experience for the market, and it scrapes the patina of idiot management out of the ecosystem.
Now, for many investors, the crypto crash was also a tough lesson in the risks of leverage. In the volatile world of cryptocurrencies, prices can move up or down very quickly. I mean, what went above 25K in the middle of August went back down below 20K by the end of the month. That's a lot, right? And if you don't know what you're doing with leverage, you can easily get wiped out. Let's see what Kevin has to say on this matter. As the saying goes, if you don't know what you're doing, don't do it. This sage advice is as relevant today as it ever was, especially when it comes to leverage in the cryptocurrency markets. The recent crypto crash was partially caused by traders over leveraging their positions and then getting liquidated when the market turned against them. This led to a cascade of selling that drove prices even lower. Kevin also believes that if you don't know what you're doing with leverage, you can easily get wiped out in a bear market. So before you trade with leverage, make sure you know exactly what you're doing. He believes one of the most important things we can do from this crypto crash is to learn from our mistakes and take steps to ensure that they're not repeated in the future. Before going ahead, don't forget to like and share.
Crypto is not yet a real asset class because it hasn't been regulated yet. So for all the excitement about it, and one of the reasons I'm long, certainly WonderFi stock and 32 different crypto projects, is that I believe over the next 2 to 3 years, we will get regulation. And then finally, we can get institutional participation. People forget that 70% of the world's wealth is tied up in pension and sovereign wealth funds. And so if they're not allowed to buy the asset class, there's no underlying bid. And that's one of the reasons we can't get crypto past $24,000. It's really hard because there's not really a large constituency that's permitted to buy it yet, particularly Bitcoin and Ethereum and even USDC, probably the three most popular right now. And so if we do get regulation first, it'll probably happen in stable coins because that's been very volatile lately, and there is policy on the table in the Hill, bipartisan policy that's being contemplated as early as next September, which is not far away, just weeks to be looked at. And if not, it'll be after the midterms, but that's coming first. And then, of course, it'll be on to Bitcoin and others, whether they're allowed in an ETF. But that's the upside. That's why you participate. But to say that, it's a real asset class, it's not there yet. It's still nascent. It's tiny, but it doesn't mean you shouldn't invest. You should be ahead of when it's finally made a real asset class because its price will materially appreciate. That's my investment thesis.
Talks of regulation have started spotlighting, and we can see some regulations over the next 2 to 3 years. By next September, we can also see regulated stablecoins, followed by Bitcoin and other cryptos. Dubai's Virtual Asset Regulatory Authority has also proposed for new guidelines on marketing, advertising, and promotion of cryptocurrencies. Even the Central Bank of Singapore has announced that they will be making several changes for bringing new crypto rules and regulation policies due to the recent collapse of several crypto hedge funds, such as Vald. What do you guys think? When can we see a fully regulated crypto world? And is there another Bitcoin drop waiting? Do you believe it's a good time for getting into the market? Will we be able to see a dovish Fed by the end of the year? Let me know your thoughts in the comments below. And don't forget to subscribe, like, and share. I'll see you in my next video. Adios, and thanks for watching.